Welcome once again, my people. In this video, I'll just simplify the whole concept of IPDA data ranges for you guys. And in my small little community of Telegram, this is for you people, first and foremost, and for the rest of the YouTube and whoever wants to join me later on. What is IPDA data ranges? What does it stand for, and what are the pros of IPDA data ranges? First, I want you to focus. I want you to take your notes out. I want you to write these things down, because writing will make you understand and make you remember as well all these things, and then you'll use this on the charts every time you go on the charts and every time a new month starts. All right, so over here, IPDA means interbank price delivery algorithm, right? As the name suggests, you would know by now that it's an algorithm. And why would people ask sometimes that why does price and these charts which we see online, they run on algorithms? So for me, I just have a simple answer that, you know, YouTube and the video which you're looking at right now, it's given to you and showed to you by an algorithm. Google searches are run by an algorithm. The things which you see online are results of algorithms which are always working on your every single click, and they are monitoring every time you watch a video, click on a link, any particular thing which you look for. Just like that, these markets are run by an algorithm, because they are datas, right, of the emotions of people, and then the transactions which happen with large and major players in the market. So what's IPDA actually, and how is it useful? So in this box over here, number 1, it helps traders to find the next draw on liquidity. So the whole idea and concept of you being confused about the next draw on liquidity, major draw on liquidity, of course, it's answered in this. It helps traders to find the next draw on liquidity. It is the reason we get the 4 phases of the market. You know, there are 4 phases in the market. If you studied ICT, you would know. First is consolidation. First is always consolidation, guys. Okay. Next comes up expansion, the retracement, and the reversal. This is the whole market, right? Third one, large orders in the markets are moved by IPDA by major speculators. So these major speculators, they use IPDA as well. Major highs and lows in the previous 20, 40, 60 days will be your playground. So I'll show you in a while. What do I mean by this? Fifth, you can understand where is price drawn to and until when it will go to a certain level. Need to understand this, and let me read this once again. You can understand by using IPDA, you can understand where is price drawn to and until when it will go to a certain level. All right, meaning you'll have a timeline. Let's suppose you don't know where gold is going for it's been parabolic since a very long time. It's been going bullish. You don't know until when it will go. Now you don't know where it will go, like price will go to 4,000, 5,000, 2,500, whatever. But using IPDA, it will help you realize and understand until when it will go up, and then when you can expect a retracement or a reversal. You get it? And the 6th is IPDA helps you understand whether you are in a time-based premium or discount. In premium, you sell. In discount, you buy. Get this in your head. If you're still distracted by something in your hand or something which is like distracting you, snap out of it. Focus on this. Premium, you sell. Discount, you buy. In any time frame, in any given narrative. Understood? So let me just get back on the charts, because I want to show you something which I made in the previous videos. Just notice this example first, and then I'll move on to the current example, like how it will be in the next month. All right, today is the 30th of September, and if you would remember, that I was using the month of August. Okay, wait, just give me 1 second. Right here, month of August. This is the 20-day look forward from the 1st of August. This is the 40 days, and this is the 60 days. All right. Now, I told you in my previous video that from the 26th of September, meaning the 40 days from August the 1st, we will see a retracement in gold. All right. And you can see the result as of now, what's happening in gold. Let me move this. Over here, we made the high, right, around 2684 or 2685. From then onwards, we are looking at a retracement. If you are keen on buying over here, thinking that it's bullish, then possibly you'll be mistaken. And of course, I might be wrong, because I don't know where it will go from here. I don't know, really. In my opinion, it has to retrace. It has to retrace, and at least to the equilibrium of this trading zone right here, from this low to this high. Okay, it's yeah, right there. So towards the equilibrium of this trading range, dealing range, right there on a daily chart. Okay, that's for another this thing, the video, like the premium and discount and how to use that particular aspect of trading. But you realize the whole idea of this thing. I'm using 1st of August, 40 days, even on 20 days, you see there is a continuation. We saw 20 days, we manipulated right after the finish of 20 days, we manipulated, and then we expanded all the way up till the 40-day IPDA data range, and then we are starting to retrace again. Who knows, we might see, this might be a manipulation again. We might see after this manipulation, we might see kind of a consolidation, and then another reversal. All right, so this is the whole idea. Now let me put it to another scenario. Okay, let me just right there. Okay, today this is the month of October over here. This is 1st of October right there. We have 1st of October over here. If we'll zoom out and move forward 20 bars right there. Let me just help you guys a little bit. Okay, like this. Let me finish this up and then we can move forward. These are the 20 days, sorry, these are the look back. So right here we have 20 days move forward. So I'll move this over here, 20 days. After the 20 days comes what? The 40 days look forward. Right here. These are 20 days. These are 40 days right here. And after the 40 days, we have what? The 60 days look forward. All right, I'll just make everything very smooth, guys. Just give me 1 second, because this laptop is because of it's been using so much of memory, it's a bit slowed down. From 1st of October right there, 1st of October, okay, 40 days, and we have 1st of October right there, done. Let me delete this one. So from 1st of October, if you see 20 days, 40 days right there, and these are the 60 days from the 1st of October. Okay, now looking back, we also have to look back 20 days right there. Okay, delete this. This is the 20 days look back. 20 days look back from the 1st of October, sorry. This is the 40 days look back, and this is the 60 days look back right there. So now in this we have a whole playground right here. This is 20 days look back, and this is the forward. All right, if you're an intraday trader, this is your only zone which you want to look at. This is the whole zone, this 20 days and these 20 days. Okay, so now what you want to do is make sure this is the 20 days high low. Okay, we are at the low of 20 days. Delete and delete. Okay, so things shall be clear in a second for you guys. I'm sorry about this because I had to make sure that you understand everything. This 20-day look back from this place, we have this high right there, and we have this low. This is the lowest low and the lowest high of the 20 days look back. Okay, if you go back 40 days, this is your low of 40 days, and this is your high of previous 40 days. Let me make this line a little bit darker. I'll put it red, so the red color is for 20 days. Let's keep it backwards right here. So now your whole idea over here, this is your whole playground right here, this dealing zone. Now where are you in this dealing zone? Anyone who has an eye which sees and a mind which thinks will know that they are in a premium right now of this dealing range. Tomorrow is it did not hit yet, but it will. Once the video uploads, you will see we are in a premium of the whole 20 days of previous look back. Now what you want to see is, if you want to buy, at least you want to see that price returns to this equilibrium of the previous 20 days, and you look for buy trades from here. You can shift your bias from here. If not, if you don't see anything at that particular moment, you will see price being attracted towards this zone right here, because these are major liquidity zones. So I'll just remove this as of now, and I'll help you out with this. This is your sell side, all right, and this is your buy side liquidity. These are major liquidity zones right there. Now if you are in a premium of this zone, you want to sell, and you want to sell at least towards the equilibrium of the price range. Okay, now what do you want to see if this idea is not touched? If you want to see price returning to this sell side liquidity, but then it does not hit there, what do you do then? Like, what if price just, instead of moving towards your deserved and like your determined plan, instead it does like this, something like this? What do you do at that point? You want price to come towards the equilibrium, give you a proper setup, and then you want price to move here, right? But then it does not do that, but instead it just starts moving this way like this. Then what do you do? Or it can go directly up. Then what do you do? At that particular point, the end of the 20-day will come in play. You want price to begin from here, manipulate, and then hunt the buy side liquidity towards the 20-day. So this whole idea, it should be along with the time. Don't just look at price. Don't just look at these major order blocks, this order block or this FVG, this FVG. Do not just look at it. Instead, look at time as well. Of course, these FVGs, this FVG right here, it plays a major role. Why? Because, well, basically it's in the premium. So this order block right here, it plays a major role. This FVG, which overlaps with this low right here, it plays a major role. All these PD arrays which you see, they play a very, very major role in this. So this is the whole idea. Now, how do you use CRT in this? How do you use CRT and turtle soup? After every 20 day, there will be a turtle soup. Beginning of this month, you'll see sooner or later there will be a turtle soup, basically at this major low right here which you see. All right, just keep an eye on this low, because it's in the mid of this whole range. So it's time based, and this is also a data candle. I'm sure this was the FOMC or Fed meeting. I don't remember, but you can check for yourself, verify. So this low is a major low over here. If you want to see a turtle soup, you want to see a time based turtle soup, meaning even I'll use quarterly theory in this as well, because I'll use it whenever I want and whenever I can. Okay, something wrong over there. Okay, let me see. From this moment onward, we want to see, yep, right there, accumulation, manipulation, distribution, continuation, or reversal. Okay, so you can apply these all these different scenarios and ideas into your own trades and then form an idea for yourself. Don't think that there is a secret to the markets. Don't think that just because you know IPDA, you have the holy grail or something. It's just a confluence. So simplifying it, how you will see and use the turtle soup and CRT, you will always look for it in the third quarter of any particular time frame. Let's suppose from here till the first week. This is the October, right? So October till Friday, that you'll look for trades in the third week, meaning on Wednesday, and then let it continue all the way towards Friday. That's when you will find your major turtle soups and major CRT patterns which you will trade. Okay, and a pattern is a pattern, meaning a pattern is nothing, as mentioned by Romeo, but the understanding of the lower time frame function at a higher time frame key level. That's it. That's what it is. So if you understand, this is the higher time frame. Let's suppose it's an FVG. Okay, and this right here is your lower time frame pattern. This is your pattern on a lower time frame. This is a major FVG. This is the pattern. You understand? You have to understand this pattern and when you will have to enter it. Okay, remember the quarter 3, remember the perfect times, and remember what I taught you in this. And if you still have any questions regarding this, do ask me in my comment sections, and join me in my Telegram group so that you can ask me a question there, and you can learn a thing or two from there as well. So until next time, good luck and good trading.